Hey, what's going on, everybody? It's Matthew. Now, today's episode, I'm talking about my Bitcoin tuna fish analogy. Now, I'm not a money manager and I'm not a financial advisor, so please invest at your own risk and do your own due diligence before you start investing into these types of assets because you want to have a clear state of mind and also know what you're investing in. I was working earlier today and I was putting some Bitcoin on my ledger, which I do very often. And it is basically where I've been DCAing or dollar cost averaging over the months. And I put, $50, $100, $200 each month. And I've been doing this for years and steadily over the last couple of years, accumulating a pretty good amount of Bitcoin because I've been getting it at different price points. And one of the things that I try to do on this channel is I try to simplify the way that, it's expressed as far as crypto so that it's easier to understand. Now, for those that know about inflation, we're currently dealing with high prices on things like gas and items in the store. And that's because, we've seen a lot of money printing and there's more money in circulation, which then means you need more of it to purchase stuff because the actual value of that dollar has gone down. Now, Bitcoin has a programmatic scarcity where every 4 years the supply is cut in half. And what I mean by that is that in the beginning from 2009 to 2015, there was over 10 million Bitcoin that were mined that are actually in the market and being held right now. And currently in 2022, we're a little bit over 19 million Bitcoin in supply. With a total of 21 million that will ever be mined. So we're a little bit under 3 million left that are going to be mined over the next many years. And what's going to end up happening is every 4 years, and the next one is in 2024, the amount of Bitcoins mined per day is actually going to halve. So for instance, right now, every day there's 900 Bitcoin being mined. That would mean that in the next halving cycle, there will only be 450 being mined per day. And the next halving cycle after that, there will only be 225. So it just keeps halving. So what does this mean and how does this relate to tuna fish and how I'm saying this? Tuna fish is a very sought after commodity in the market because it's used in things like sushi, and a lot of people enjoy it for their dinner. So there is a need and a want for it. There's a demand. And let's say theoretically, this year there was only 1 million tuna that were caught and able to be sold on the markets globally in the world. But 4 years later, there was only 500,000 that were being able to be put on the market. And then 4 years after that, it just kept halving. What do you think this would do to the price of tuna? So when I explain to people all of these bumpy kind of ups and downs that are going on with Bitcoin or Ethereum, and Bitcoin especially, is that Bitcoin has a programmed scarcity in it, and as many people value it and see it as the future of money, and it's halving every 4 years, that means that getting some of it now is basically allowing you to have that gold that's going to be diminishing off of the earth slowly, right? So this programmatic scarcity, just like tuna, how much would people pay if there were only 6,000 tuna caught per year? What would be the price of that tuna, right? So in the beginning, when Bitcoin wasn't a sought after asset and, there was tons of it on the market, there wasn't a huge price point for it. Now, as the global adoption curve has occurred, now people such as investment banks, different funds, different people out in the crypto ecosystem are wanting it, there is not enough supply to go around. So the price is naturally going to lift up to fulfill the demand. If this is the most sought after thing, then they can keep basically putting the price on how much one is worth. And as it decreases and diminishes, it's like, how much would you pay if you knew you had the last 100 tuna on Earth, right? It's a scarcity thing. And this is why things like Lamborghinis and Ferraris and Rolls Royces are so expensive, is because there's a great value, a brand, a name associated with it, but there's not as many produced as a Honda Accord. So when I use the tuna fish example, it's just to show you that when something is in demand and there's less of it, people are generally willing to pay more to have that delicacy or that asset or commodity, and that is what's going on in Bitcoin. And it's causing a lot of people to basically start to study this and try to figure out how they can actually own a piece of their own. Because over time, it'll be hard to even own a 0.01 because it'll be worth so much. So the people that are doing their due diligence now and they're just collecting it over the years, those are going to be the people that hold on to it like gold, but digital code, and basically have the opportunity in the future to have somewhat of either a retirement or B, the freedom and opportunity to know that something that they purchased many years ago has a value that was programmatically scarce, and the scarcity was built in throughout the years. I hope that was a great explanation of that, but let me know what you think in the comments below. Share and subscribe to this channel, and I'll see you guys next time. Thank you very much. Bye.